Thank you all for joining us today. My name is Penny Lee, President and CEO of the Financial Technology Association. We are a Washington, D.C. based trade association representing the fintech industry. Today, we were talking about an important concept called open banking. Many of you might not know what that is, but yet 80% of Americans use it or benefit from it on a daily basis. And that's the ability, and the whole concept is about the ability and the protection of you as a consumer to own and share your financial data, not have it owned by the banks, not have it owned by financial institutions, but to have you be in control of your own financial information, to be able to use the apps and services in which you want to use to live your best financial life. So today we're going to dig into this concept and tell you why it's important and why we're doing it now. There's what we would call in Washington, a rulemaking process underway. Trump administration is reevaluating what the rules of the road around open banking should be. And so today we're going to dive into that and the urgency of the matter. So I'm going to start and I'll introduce everybody and then turn it over to our moderator. Today we have Alex Rampell, General Partner of Andreessen Horowitz, Mackenzie Burnett, co-founder and CEO of Ambrook, Brian Caldwell, founder and CEO of MX, Garry Tan, president and CEO of Y Combinator, and moderated by former House Financial Services Chairman Patrick McHenry. So, Mr. Chairman, I will turn it over to you.
Well, honored to be with you. Thank you, Penny. Thank you for hosting and FTA for hosting today. And we do have a fabulous panel. And I won't take too much time before we get to the experts here. But I just want to share a bit of history on 1033 or the open banking rule. We have had a decade in Washington to come to terms with a new set of regulation that guarantees individual consumers in the financial realm in particular, but have access to their own information that is stored within regulated financial institutions, banks. In this case, we have a rule that, like I said, has been contemplated for a decade, but it has only been enforced for a brief period of time. And then the Trump administration wanted to review the rule, have a better understanding, and balance it and tailor it to the current needs of the marketplace. And in that pause, we have large financial institutions, large banks, that are taking that moment of regulatory uncertainty and creating a substantial amount of friction for individuals to access their data. They're doing this in the name of fees. They're doing this with fees in the name of consumer protection, but in trying to do that, what they're doing is preventing consumers from accessing their own information held with banks. This is a daily occurrence for all of us that have a bank account. We utilize this access to our information, and we grant that authority to tech firms to give us the easiest way to access that information or open up new opportunities for us to engage in financial life in a digital setting. So what we have is a moment of uncertainty, and one bank in particular has gone out with a substantial amount of fees that have the net effect of stopping us from accessing our own information. That is the result. So what we want to do is discuss the marketplace, the effect, and what we hope to be the final outcome. We've got a great set of folks that are utilizing or deeply understand this open banking rule, what it opens up for opportunities in a real setting. And so let's get started. We have Alex Rampell with A16Z. And from an investor's lens, how do you see open banking shaping innovation, in particular for fintechs and competition in the United States?
Yeah, I mean, I think that last point is the way to start, which is competition is good. Competition is how consumers get better choice, better products, and better prices. And if you look at the fintech companies that have popped up in the last 10 or 20 years, and these are things like Venmo or Robinhood or Coinbase, all of them required, I actually want to step back a step here. And when we talk about consumer data, there are kind of two things. There's all the transactions that you made as a consumer, and I kind of consider that your data, not your bank's data. But then there's something very, very basic, which is the account number printed on your checkbook and the bank routing code printed on your checkbook. And if you're under 30, you probably don't even know what a checkbook is, but those things are there. And if I want to go, if I'm like, wow, I have a Chase account, I want to open a Robinhood account because they're giving me a great interest rate and they let me trade stocks for free, or I want to get exposure to Bitcoin, I want to open a Coinbase account. Step one is you need to move money into one of these new companies. And the data that these new companies need is just the information that's printed in the bottom of your checkbook. They need your checking account number and they need your routing code. But you go to a 25-year-old kid and you say, give me your checking account number and routing code. They don't know what you're talking about. But they just want to open a Robinhood account. And Robinhood wants to pay you more in interest than Chase pays you. Or Coinbase wants to give you exposure to an asset that Chase does not give you. So what's happened in the last 20 years has been powered by open banking or kind of quasi-open banking. And this Europe actually has a de facto open banking rule. We had Dodd-Frank in 1033 and banks didn't really know what to do, but they couldn't really stop it. So companies like Coinbase, like Robinhood, like Chime, like all of there's been hundreds of billions of dollars of market cap of companies, but more importantly, there have been thousands of these small companies that have popped up where it's really easy to go sign up for Venmo. It's really easy to go sign up and fund your Robinhood account. And it's because the information has been freely available. And part of the information, I really divided in two. Part of the information is just like the information that's printed on a check. But if I want you to sign up for a Robinhood account, you want to sign up for a Robinhood account and you don't even know where your checkbook is, how do you do that? It's really hard. And companies like Plaid and MX and Finicity, like there are a lot of companies that have made that very, very easy. But then there's the other side. Where do banks make all of their money? They make money, predominantly, if you're a savings and loan institution, on net interest margin. So maybe I'm charging you 25% for a loan. There are a lot of fintech lenders that have popped up where they just need to know, do I make Garry a loan? Well, I need to know how much money he earns. I need to know all the transactions that are going on. Garry wants to give it to me, but it lives in his bank. And he wants to authorize that information to go to me. And that's another component of open banking or data that is needed for these fintech companies to pop up. And of course, would you rather live in a country where you have 10,000 people that can loan you money? What do you think is going to happen to the rate that you're going to get charged? And it's not even the rate that you're going to get charged. There are a lot of people that the banks, I don't know anything about your income. You're 19 years old. You don't have a credit file. Do I give you a loan? Yes or no? There's a company that will pop up that goes through Y Combinator that figures this out. And boom, now you can get access to a loan. So, it's almost tautological, like more companies is good. That's better for consumers. You get more competition. And that's what open banking, that's why we've had this for the past 20 years, because it's so easy right now to go sign up for another service that are coming out of great platforms like Y Combinator.
That's great. And Alex, spot on. Now, just one thing I want to add is there's been wide bipartisan support on Capitol Hill for keeping this law that demands the rulemaking on 1033. There's been bipartisan support for a long time for that. And currently there is bipartisan support for open banking. But what's at risk if we have very high fees for consumers' access to their banking data? What does that do? What kind of marketplace does that create, Alex?
Well, so what would happen there? Let's rewind to a second. Like, Baiju and Vlad start Robinhood. They start advertising like, hey, trade stocks for free. Don't spend lots of money trading stocks. And you click on that ad, and then it's like, ooh, shoot, Chase is going to charge $20 to move, like not to move my money, but just to like give my checking account number to Robinhood. Well, Robinhood now doesn't have a profitable business. Like they can't onboard me as a customer. Or I'm not willing to pay that much. So a lot of these companies just wouldn't exist. I mean, literally, like it would be a no-op. Like the lenders, like for a firm. So I co-founded a company called Affirm, buy now, pay later company. There are a lot of Americans that have a credit file, and we can say, oh, you have a 720 FICO and you want to buy a Peloton? Great. Oh, we've never seen you before. You just graduated from college. Can you just let us know how much give us access to your bank account? Not because we want to do anything bad. Like, we're going to access all of your deposits and all of your debits because we're going to come up with the cash flow underwriting. Is that cool with you? You're like, absolutely. Okay, great. Now you can buy a Peloton. And these companies just wouldn't have existed if the fees were too high. Now, sure, if fees were a penny, wouldn't matter. But there's a saying that I use a lot, which is the best companies have hostages, not customers. And some of the banks have hostages. Like I don't want to keep a Chase account. I loved my First Republic account. First Republic sadly did not make it. Was bought by Chase. Chase charges me $25 a month to keep my skeleton of a First Republic account open. It's so hard to move. And the kind of the metaphor that I would use here is everybody, I think, on this call would agree if you take a bunch of pictures on your iPhone, they're your pictures. They're not Apple's pictures. But if I want to go install Dropbox to go back up my pictures, or if I want to go upload my pictures to Instagram, and suddenly Apple says, you got to pay, or rather, Instagram has to pay $10 to access your pictures on your phone. Well, then Instagram just wouldn't have gotten off the ground. Like it just wouldn't have existed. They couldn't have afforded to pay that. And to me, it's just patently absurd that the banks would argue, this is our data. No, it's customers' data. This is my pictures are my data on my phone. My transactions in my Chase account are my data. I own that. I should be able to tell a firm you have access to that. I should be able to tell Robinhood, yes, here's my information. And one of the banks have made two claims that are false. One is, it's just so much, it's overload of data coming out of our systems. I had my team run this 1 second of YouTube. So YouTube streams all these videos across the world, right? 1 second of YouTube data is more than all of the data that the banks have to send to these aggregators in a year. I mean, it's like, what's the data that the bank is sending? Well, it's like you made 20 transactions at McDonald's, In-N-Out, and Chick-fil-A. Like it's just like little pieces of text, or it's the information printed on your checking account. But to answer your question, which is a very good one, we don't know the counterfactual, but I'm pretty sure that if Apple said, hey, $10 has to be paid every time photos leave your phone, Instagram wouldn't have gotten off the ground. Just wouldn't have. How would they pay for that? Consumers, I mean, maybe the consumers don't pay, but it doesn't matter. Consumers do pay if services that serve them cannot exist. And the same thing would have been true. Like, would Venmo have worked? No. Like, you have to pay Venmo didn't have the money to go pay $10 to go extract information that you wanted to give to Venmo.
Right.
Coinbase wouldn't have existed. So that's how I think of it.
And in many respects, these financial innovations have occurred not because the banks it hasn't been a part of the thought process to innovate, but because these type of innovations have been able to be incubated because of open access to data. And Mackenzie, you in particular have created a fintech. Can you share concrete examples of what OpenAI is doing for you and for Ambrook, and what that means to people in the real world?
Yeah, so I think Ambrook is actually an example of the kind of business that would be really difficult to build, that Alex was talking about if ability to connect to some paradigm of open banking as it exists today, and ideally will continue to exist in an even better way in the future, didn't exist. And so as a quick introduction, I'm Mackenzie Burnett. I'm the CEO, co-founder of Ambrook. We build accounting and payment software for farms, ranches, and adjacent rural businesses across America. And they rely on Ambrook for real-time visibility into their finances. I'm actually calling from a customer's farm in Vermont, so forgive me if any connection issues come up. But small business.
What kind of farm?
Yeah.
Tell us what kind of farm.
It's a diversified veggie and livestock operation in Vermont, and I'm actually just watching them. They gave me the event barn to do this out of, and so these customers basically in order to survive, super thin margins, right? They're doing weddings, right? They have a farm store out here. They do all of that relies on every single payment method, every single credit card, every single bank account relies on the real-time connectivity to all of those banks and other financial institutions. And so without open banking, we just can't serve them as well.
Excellent. And so what happens to Ambrook if banks have this large toll booth to access payments?
So either I think, looking at the business model of these we rely on the MXs, the Plaids of the world in order to connect to enable our customers to access their own data, right? And back into our accounting software. And so I think the reality is either twofold. Either one, if and our customers disproportionately rely on small and regional, the long tail of banks. So these are not the Chases of the world, right? This is Huntington Bank or Vermont First Credit Union or something like that, right? And they are a tiny percentage of the overall volume of the connections that an MX sees at any given time. But we disproportionately work with customers who rely on those local banks that do power local communities and are really important to be able to connect to and continue to do business with. And so either if they have to if they either have to compete in a fee-based environment from the largest institutions, they'll be dropped by MX and Plaid. And so our customers will lose access to have real-time visibility if they want to continue working with those banks, or Ambrook will have to eat those fees, right? Or we will have to pass them along to our customers who are already running on thin margins. And so the paradigm doesn't look great in any of those situations.
Okay. So Garry, from one startup to somebody who sees thousands of startup pitches, how does open banking impact the next generation of fintech innovation and innovators?
Absolutely.
And how would that impact the broader startup ecosystem?
Yeah, great question. YC has over 500 fintech companies because consumers actually desperately want better financial tools. So the polls actually show that most people would switch banks if they can't connect their accounts to their apps that they want to use. And the banks are fighting to maintain their data monopoly here. The real examples are pretty shocking. PNC blocked Plaid for 5 years, cutting off 900,000 customers. JP Morgan now wants $300 million annually from Plaid alone. Our portfolio companies like Truebill, Nova Credit, and Treasury Prime, they only exist because they could access really their own consumers' data. The data belongs to the underlying users and consumers, not the banks. And without open banking rules, you can't actually build, say, a budgeting app that would help you do things, especially now with AI, that the bank will probably take a decade to actually build something that could help people in that sort of sense. And so and you really wouldn't be able to build that app if one bank can charge fees that exceed your entire revenue. So how the Trump administration really lands on this rule will determine whether entrepreneurs can challenge incumbents or whether these banks can lock in their oligopoly forever, really. For startups alone, I mean, these startups can actually do really important work that a lot of things that, frankly, the large banks aren't interested in or, really just won't get to. Truebill actually helps millions of Americans cancel subscriptions and negotiate their bills. They've saved users over $250 million. But it only works if you can see your bank transactions. Nova Credit has unlocked more than $10 billion in credit access for immigrants by analyzing cash flow instead of credit scores. Treasury Prime lets any startup embed banking into their product. And so they really exist because they have access to financial data. And without open banking, none of them even launch. So, you really have, and ultimately, this matters to consumers in that when you look at the impact that fintech startups have on people's day-to-day lives, 90% of people surveyed say that fintech has helped them, and the majority will save at least $50 a month. So these are some real benefits for people, and banks want to frame this as sort of security theater, but what's really happening is they're protecting their oligopoly. I really like what Alex said about the users are being held hostage today, and that's not the America that I want to be a part of and that I know. Competition and giving users choice is actually the best way for technology of any kind to make people's lives better. And so when they control which innovations reach customers, They, copy the good ideas, they charge rent to everyone else, and they kill anything that threatens their fee income. And what that means is the future will eventually show up, but it'll show up far later and it'll be far more expensive. So, for the broader ecosystem, for startups itself, this is just about whether a few incumbents can use their data monopolies to stifle entire categories of innovation. And we've seen this movie before with telecom, with healthcare. These are all concentrated industries using gatekeeping to prevent disruption. And that's really what we don't want. That's what's at stake by October 21st. Entrepreneurs can build better products for consumers, or will we lock in the current players forever? Because if the banks win this fight, the message to founders is clear. Don't bother innovating in financial services. The incumbents will own the rails and they're not going to let you compete. So we've backed over 100 fintech companies just this year because we see massive consumer demand for financial tools. But all that innovation and all those American jobs, all those consumer benefits, they disappear if banks can gatekeep here. So, it's really, do we want an economy where entrepreneurs can challenge incumbents? Or do we not? Do we want to just give it up to the giant oligopoly?
But you see this regularly with startups that go through Y Combinator, that you see a company that has a very particular, like Ambrook, a very particular set of folks that are underserved, that they seek to serve through a fintech application and trying to do something faster, better, cheaper. That there is a market, it's just not a mass market, and therefore it's not going to be served by the biggest, or innovated to serve by the biggest. So how does that have a ripple effect across the broader startup ecosystem?
Yeah, I mean, Nova Credit is a great example, right? That was a startup that had to create a new market from scratch. If it was obviously a giant business already off the bat, the banks would have been already doing it. But by try, basically smart founders took a risk. They said, nobody's doing this quite yet, but it's an idea lying in plain sight. They're incredibly smart, talented people who come to the United States to build their careers all the time. And it really doesn't make sense for them to have to, go through many, many years of building credit when they have, cash flow, income statements, and, financial histories from overseas. And so, that's a real pain point faced by, you know, many millions of immigrants. And that basically was going to be unaddressed. And so it takes people who, um, you know, they quit their jobs, they took the risk, and they basically started with not, today they might serve uh, hundreds of thousands of customers, but today, when they first started, it took someone to take a chance and put their career and quit their jobs and take a risk. And to me, that's really the American dream. Like if you look out in the marketplace, there are things out there all the time that require someone to take a risk and take a chance. But then that's the beauty of America, that you're able to do that, that you're able to get capital to do it, that you can get a community that will help you, and then you can access customers, that you could get distribution. And all of that goes down the drain and is cut off. Essentially, if you can't get access to data, if you can, if and if if the toll is too expensive, then frankly, investors will never even invest in a company of that sort. And as a result, all of those millions of people who are now sort of enjoy the benefit and fruit of being able to participate in the financial economy, like they just wouldn't, or they'll do it later.
Well, the old school toll booths are a great nuisance for anyone who travels. But the new innovation now is around a technology solution that lets you go faster down the highway. And in many respects, this is what we're talking about with open banking. It's not so much the toll, unless you're in the Northeast. It's not so much the dollar amount. It's the friction of the toll booth that is the aggravating factor. But Ryan, this is your business to make it easier for fintech innovators to access, for you to help fintech innovators access their customers desires, right? And help. So walk me through your business and how open banking enables fintech innovation and the consumer benefit.
Yeah, so at MX, we power fintechs that are just like Mackenzie's and the kind of type of fintechs that Alex and Gary are talking about. But interestingly enough, we also power a tremendous number of banks. We actually power far more banks than we do fintechs. And I think one of the key things, and Gary pointed it out several times really well, is that it may take banks years longer, even decades longer, to innovate some of the things that are rapidly innovating with some of these fintechs. And I think that the big misunderstanding is that it's fintech versus bank. And we definitely don't see it that way. We see it as very synergistic. Like I see that as these fintechs are rapidly innovating, they're showing all these little pockets of value that the banks can benefit from. And we've seen banks, we believe solidly in MX and the nobility of banking. I mean, banking is critical infrastructure. That's why we're all on this phone talking about it, is that we need banking to exist and we need it to modernize and we need innovation in that space. And there's this confusion that it's data going one way, as if there's just data leaving the bank. That's not what's happening. And we've seen great banks step forward and say, we're never going to charge, we're going to open these floodgates. And what we're going to do is use the incoming data to be able to better serve our consumers. So what is that incoming data that the bank is getting? The bank is getting in real time that someone connected to, as Gary said, a Nova Credit or whatever it might be, or a Robinhood. As they see hundreds, thousands of fintechs that are varied across billions of dollars of investment, the bank is able to see in real time what their consumers are connecting to, what they care about, what they stay connected to, and why. And they can figure out the needs that allow them to modernize and better serve their consumers. So we've seen some banks step forward and declare in private and public, we're never going to charge. That's not what we're going to do. We're going to innovate, and we're going to leverage this incredible thing that we have here in the US, this strong fintech ecosystem, to teach us how we can be better. Where have we missed innovation, or where can we evolve faster? And they're getting more value out of that. I mean, think about what a bank would have to do, or a credit union, to invest not hundreds of millions, but billions a year in R&D to be able to learn what the venture capital industry is already investing into fintechs, a large number of which fail, and they get to see the successes and the losses. But the most important thing is they get to see exactly how it affects their consumers, how it changes their spending behavior or saving behavior, and then better serve them. So embracing open banking is one of the best things a bank can do to become strong, modern, and powerful, better for their consumers. But I think some banks have misunderstood it as an affront, as an attack, as if they're being looted of data, and they only see it as a one way, and they're missing the boat. They're missing the boat that they have 10 times, many, many times over. It's exponential what they could get out of it versus whatever, cost that there might be there. And I think Alex, pointed out very clearly that this cost is not that high. APIs, are very easy to maintain. We do, trillions of API calls on a regular basis, and we run all the infrastructure for it. So there is a cost there. We recognize that. And I recognize this bank's concern around fraud. I think they've got some valid concerns there. But this goes to a point that, I've talked to Penny about this in the past, that there's this balance between regulation and the private sector. And I really appreciate the work that FTA does, because they're bridging this critical gap, because we need rapid innovation on the private side and the private sector. And then we need that just enough guidance, not over regulation, not overly heavy, but just enough clarity of, is this data the consumers? Can it be charged for? Can it not? That type of clarity married with private sector innovation is a perfect balance. And I think that's what we have to strike. That's where we need to be focused.
And so your firm has these connections, and therefore you provide this not just to fintechs, but to small banks. Is this really a small bank? 1033 helps small banks as well as fintech innovators?
Well, yes, for sure. But I would also argue that it benefits large banks just as much as anybody. Think about if you're a large bank and you're trying to serve your consumer, but you don't have a 360-degree view of their financial life. You can't take care of them. So there is no financial institution that's going to not have to lean in to connect to the different data sources. If you want to give real advice, just like these great fintech companies that Garry and Alex are talking about, and like Mackenzie's running, if you want to be able to understand what your consumers are worried about and how to better serve them, you have to connect to this data. There is no world that exists in the future where you can't. So the big banks will need it just as much as the medium size and the small banks and the fintechs. The entire world needs it. I mean, I've heard Alex's firm, Andreessen Horowitz, they've talked about how everything is a fintech, and I would argue that that's true. I mean, you have all of these companies that they can't properly serve their consumers if they can't connect to financial data, and you're seeing innovations with companies like Walmart that are trying to figure out how to pay their people right as they leave at the end of a shift, or an Uber or DoorDash who are trying to figure out the same thing. And they're going to have different ways and methods of connecting to data, financial data, to be able to accomplish these things, or at least get them kicked off from the initiating point. So this is something that every company that you see of any size or scale is going to have to worry about this. And if we can't innovate with a 2-person, 5-person startup at a Y Combinator, then we won't see this huge number of ideas that come up, of which only a few survive, but they show us the way. And now we can have that innovation this year or in the next few months versus the next decade or two.
Okay. And so Mackenzie, along those lines, so we've talked about the highway, the toll booths, and all this stuff, but what's actually happening? What's your roadmap for product offerings? What are you trying to open up for your customers or potential customers through open banking?
Yeah, I mean, not even just on the roadmap, but what we've already built is we're accounting software. Accounting software is the most real-time and accurate of financial transactions that you need to get to with these connections to banks and other financial institutions, and without affordable access to that to our customers' data on their behalf. The alternative is that we have to build all those connections by hand per bank ourselves, which when we work with thousands of small and regional banks. That's just not affordable or possible for our team to be able to do, or have them not actually connect. And so then you're having a lot of our customers, the only option is to manually upload their statements. This takes a lot of time away from the American business owner, who is usually doing this at the very end of their days. Something I wanted to emphasize as part of this, though, is that open banking gives SMBs and rural Americans access to the same quality of tools and insights that enterprise or urban customers already have access to. And when our customers don't have that, it means that they miss insights, they have failed transactions, they do hours of manual entry. It's slowing down their operations, and it's limiting access to these modern financial tools. And so we really believe that affordable open banking is foundational to a fair and inclusive financial system, where small businesses and community banks both can participate, not just the largest institutions. And so without this consistent, affordable API access, rural businesses are disproportionately excluded from modern finance. So I think for us, Ambrook, we see ourselves as building for the real economy, and we believe that open banking should too. I mean, what we're seeing honestly is that from our customers is that the next generation is now taking over the family businesses, and they are tech savvy and entrepreneurial. They want ownership over their and control over their data, and they expect to make decisions using the kind of real-time visibility that open banking and modern tools can provide. And so when I've been talking about this with my team, I think the thing that we've been talking about is that we think that this type of open banking regulation should really ensure that every business can affordably benefit from the same technology and data access available to these enterprise and urban customers. We want to democratize financial insight and empower the customer, because I think America's strength really lies in its independent businesses, and data access is now just as essential to that independence as credit or internet connectivity. So yeah, I mean, I think when I think our mission in general is just to ensure that the progress here in financial technology that we're talking about lifts the real economy, not just the digital one. So that's something I wanted to make sure to emphasize.
Okay, that's really important. It's important to hear. And so from from the farm to crypto. Alex, what impact would this an open banking rule change with more gates, more fees, more toll booths? What would that do to impact crypto in the
I mean,
crypto industry?
so there's fees, which is one way of thinking about it, but there's also the thing that really bothered me. I talked to somebody at Chase about this and obviously disagreed with this person. Is like, we're doing it to keep people safe. This is what we care about. But it's kind of funny because when the CFPB announced the rule, all the banks sued, I think, the next day, and most of the rules were just put so many restrictions on the use of data, like very, very, very restrictive. So, can you, like, if you mentioned the Truebill case, which is now called Rocket Money, like, how much data can you access as Truebill? What kind of permissions do you have to get? It was actually quite onerous for the startup as well. But the bank sued, so I don't really buy the case that it was safe. And I asked my friend ChatGPT, can you give me at least how many quotes can you give me where Jamie Dimon, obviously a very smart guy, but like give me every quote where Jamie Dimon said that Bitcoin is a fraud, and it came up with like 20. So let's just say we'll take Chase at their word. They really wanted to keep customers safe. This is why they're doing it. And like, I want to keep my kids safe. I buy the safety thing. It's not about money. It's just about safety. Well, Bitcoin's a fraud. That's not good. I better keep my customers safe from frauds. Like, how can you, if you care about safety and you know that this is a fraud and your CEO is going on CNBC saying it's a fraud, I better make sure that my customers cannot, regardless of fees, send a single dollar to Coinbase. That would be very, very smart of me. So, and obviously Chase hasn't done that. In fact, they just announced a partnership with Coinbase. So I'm being, there's a little bit of hyperbole here, but not really, in that he did say 10 times Bitcoin and crypto is a scam. So you could imagine another bank where same thing goes down. And if I could actually take a step back, I'm sure you might remember the U.S. Telecommunications Act of 1996. And what does this have to do with crypto? What does this have to do with open banking? Actually, everything. Because the thing that did, and it really showed how private sector and government can work incredibly well together, is the Telecommunications Act. They mandated number portability for what were called local exchange carriers. So that's when everybody had a landline. If I want to switch from MCI to AT&T or Bell South to this, you can do that. But in 2004, this was rolled out to the entire country for wireless. So if you had a cell phone and you didn't like your service that was provided by AT&T, and a lot of people did not like their service provided by AT&T, you could switch to this company called Verizon. And Verizon had spent billions of dollars on CapEx making better towers, more towers. I don't know what they did. I actually use AT&T now, so this is not me pitching Verizon, but look at the history of what was called wireless local number portability, or a WLNP, that started in 2003, was finalized for the entire country by 2004. Verizon got a ton of customers, and AT&T lost a lot of customers. And this is the thing that's kind of missing. This point is relevant for
AT&T got them back when they offered iPhone
They
away
did.
from BlackBerry. So
Yes.
it's a dynamic marketplace. And if you think you're the winner, you may be the loser. And if you think you're the loser, you may be the winner, right?
And this is actually, I would have a lot of, and just to be fair to the banks, this person I talked to at Chase was like, don't you think that private businesses in the United States of America should be able to charge what they want for their own products and services? And I said, absolutely. But the problem is that you have a federal bank, you have a bank charter, you have access to the federal, like you, just like with the airwaves, you can't have 10,000 carriers in America. We don't have enough bandwidth for that. Doesn't make sense. So because of that, we actually we have auctions, and that's how these things are allocated. That's how bandwidth is allocated. But we also have rules, and one of the rules that really, really created a better customer experience in the United States of America, and make sure that take the crypto metaphor and extend it to like, hey, I think to keep people safe, you shouldn't be able to send text messages. Like, shouldn't Verizon be able to make that call? Sure, if and only if I am able to say, I don't like that. I've got my phone number that's on Verizon. Gary's got my phone number. Ryan's got my phone number. My grandmother has my phone number. Way too much work to change that. If they want to make this call to safety, I get to go switch in like 5 minutes to AT&T. And this was a great rulemaking example where this happened. And then customer choice actually got supercharged. And so the issue with crypto is there's the fee side, which is not unique to crypto. It's like, if Chase is going to roll out tons of fees, or PNC is going to roll out tons of fees, or anybody's going to roll out tons of fees, that's going to hit everybody. But they also get to pick and choose around things like safety. And there are a lot of banks that, again, they don't want to have competition. I applaud the fact that they don't want to have competition. Everybody, like, I don't want to have competition. Nobody wants to have competition. But consumers they deserve competition because that's how they get better products.
That's right. So let's talk about safety. Ryan, what's your response to this line that this is all about safety and security?
Yeah, the banks, I think a lot of this comes down to misunderstanding. I think there are, some of these are large institutions that are trying to wrap their head around a rapidly evolving world, right? And I've seen really good actors in banking try to understand this. And that's why I've seen differences where some banks have come out very strongly and said, we're not going to charge, we want to open the APIs, we want to spur innovation, tell us how to learn, tell us how to benefit from this, and we help guide them towards being a more modern bank. What we have seen on this misunderstanding side is this belief. I mean, it's so much better that we have OAuth. It's so much better. I mean, you said, like Alex was saying earlier, the number used to be written on the bottom of a paper check that you'd hand someone across a counter at a store that would get handed to all sorts of different people that you had no idea who had it, when they had it. Now we're entering this world of OAuth, where everything is, secure, super secure connections, encrypted connections, where you're actually even taking the account number itself and you're tokenizing it and encrypting it. And you can tell exactly who you handed it to and when they use it. This is a wildly more secure way of doing all of this than has ever been in banking in the past. So this technology is enabling that. But again, I mean, MX is very friendly to banks. I mean, we believe that the best banks out there, we want to see them thrive and survive and really benefit from this innovation. But we have to get through this education that fintechs existing are the best thing that's ever happened to banks. And we're going to have the strongest banks as they embrace the fintech revolution. And the banks that don't embrace it and fight it are literally creating their own weaknesses. They're cob-hobbling themselves in their ability to run the marathon they need to in the next decade or two. And so this is an entirely different way that we've got to get a change in thinking. And there are little pockets of thought leaders in banking that get this and understand it. And there's people who are still trying to wrap their head around it. But I think there's a lot of people who are just trying to understand it. So I see a huge part of this as an education, which is why I'm on the webinar today.
Excellent. It's a great, fantastic. Now, Penny, you're our host today. Thank you, and FTA, for hosting. We've got. I want to close with Garry, but what's the call to action? What can people do other than just understanding the issue, which I think we've had a great discussion? What is the action item here?
So until October 21st, the Trump administration has opened up a comment period. They want to hear from consumers and from others about what they should do, any modifications they should make, any changes to the rules. And what really we need is, what Alex was referring to, and Ryan and Garry, that certainty about the rule. And what it says currently in statute is that the bank shall make available upon request from a consumer their financial data. And we should uphold that notion that it should be available upon request, not available for a high toll, not available for a high fee, but it should be made available to consumers. So protecting that is really important, and the ability for consumers to have others, to have that interaction with the fintech, to be able to share it with the fintech, to authorize them to work on their behalf. So those are really key important things. So the things that you can do as a consumer, as a small business owner, and others, if you care about your financial freedom, and if you care about protecting to make sure that your data is your data, write to the CFPB. Let them know, let them hear before October 21 how important this is to preserve that right to own and share your data as you choose.
Excellent. Garry, give us the broader context.
Yeah, ultimately, we really support open banking. It's really about finishing the plumbing here. We want safe, standardized consumer permission finance that boosts competition and is actually easier to supervise for all the people who are involved here. I was looking at the attendee list, so maybe in turn, like I wanted to address each of you. There are regulators here, We want to codify verifiable, revocable consent, event level logging, strong auth, clear liability chain, and that's how we can actually make sure that the stuff is secure and safe. This is just software, and it's easier to audit, easier to make sure it happens. Now more than ever because of AI. It's a pretty wild thing, and I can't wait for you to see that. For the Hill, I think this is a kitchen table win for you and your constituents. Lower fees, real bank switching in minutes, fraud protection for people who I think that these are really important things that are kitchen table and important reorientation. This is about ultimately the American people. For banks, I think that standardized permissioned APIs cut scraping. They cut one-off integrations and preserve your security controls. They give you auditability. They replace ambiguity with clarity. For fintechs and startups, obviously, predictable rules and shared standards mean fewer bespoke bank deals and faster time to market. This ultimately means more prosperity, more startups giving consumer choice, and that's what we desperately want. For the press and the audience, I think the headline is really simple. Bank switching in minutes, auditable consent and revocation, and fewer shady workarounds. So, if this were a startup, I'd say let's do a pilot tomorrow. We can do consent UX, scopes, telemetry, SLAs, dispute windows, liability waterfall. Let's publish the results. Regulators get safety, Congress gets a win, banks get clarity, builders get speed, and ultimately consumers get control and financial freedom. That's all we're asking for here, open banking.
This is a small bit of regulatory clarity that can open up huge economic potential and helps people in the real economy. And Penny, we've heard your call to action on writing letters. We understand that the agency in charge of this, they're taking the input on writing a solid rule here that strikes the proper balance, that ensures that consumers do have access to their financial data and acknowledges the way in which consumers can best do that using the best technology available. It's not possible for an individual to set up APIs with thousands of banks. We need technology that assists us with this. Even new fintechs, like what Mackenzie is describing, use other fintechs to provide them with high quality service so they can grow and scale rapidly and provide consumers more opportunity. And more competition and more choice is very good for the American economy. And so I want to thank everyone for joining us today on what has been a really informative and lively conversation. Alex, thank you for joining us. Garry, as well. And Ryan and Mackenzie, thank you for what you do for innovators on a daily basis. Penny, thanks for hosting, and thank you to FTA. Hand it back to you.
Thank you all. That was great. Appreciate everybody. And just don't forget, get your comments in before October 21. Thanks.
Thanks so much. Have a great day.